Only reason why your CPA tells you to use an S-Corp is to protect themselves because it's less audit prone. Over 95% of business owners are still pissing money away with this strategy. When you do that little transfer from your business account to your personal account, you lose 35% of it to the IRS. An S-Corp does not reduce your tax liability. CPAs tell me this all the time. All it does is it reduces the CPA's liability of getting audited. There's one simple way to solve this problem. Instead of transferring from an LLC to an S-Corp that you personally own, you revoke that S-Corp election and you sell it to a business trust. The business trust will operate the business just like it did before, but the only difference is at the end of the day, when you need money, you do one more step. You pay the beneficial trust. So business trust gets paid from the business,
one more trust,
the owner. Then the beneficial trust is the beneficiary of the business trust. There's another distribution. When that beneficial trust receives all the income, it can now pay for all your stuff that you just sold to it. We can spend money, the pre-tax money, on houses, cars, kids ballet, karate, and all of those things because they are legitimate trust expenses for the benefit of the beneficiaries.
Whoa! Hey! Hey, hey, hey! Whoa, hey, hey!
Everything he said was a lie. And I hate to even defend this kid, but he might not even know it's lies. He could just be some pawn for the attorney and the CPA in the background that are getting paid a lot of money to put all this stuff together. Here's what trusts are. They're for three things: estate planning, to keep your stuff out of probate, and to keep yourself private with the assets that you own. Putting all of your stuff into a trust, your business, your car, your toilet paper, won't save you any tax.
Well, dadgummit, I thought I could go right off every time I went to the bathroom. They told me I could write off my dadgum toilet paper.
Sorry. You can't write off your personal expenses just because you put stuff into a trust. The same rules with the IRS when it comes to taxation apply to these trusts. 3 words: abusive trust arrangements.
Ding, 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 ding.
That's exactly what this is. The IRS knows about it. They know exactly what this child is talking about, and they're busting people left and right. Got a very sad story about a client that spent $50,000 to set up all these trusts. I'm thankful that he came to me because we were able to stop this process so that there weren't any return filings. Sadly, he had already written the check to the attorney and the work had been done. So there was very little recourse, at least with the attorney. More on that in a minute. I don't even talk about what this kid was saying about S corporations. Literally everything that he said was wrong, all right? So some red flags, guys. If you hear tax and trust in the same conversation, red flag. If you hear these people slamming accountants, trying to make it like only they know what your accountant doesn't know and CPAs are too conservative, all of this stuff is a red flag meant to create a sense of fear. All right, so remember that sad situation of this client that was totally conned. He didn't sue the attorney he wanted to, but look, your attorney's gonna put your toilet paper, your car, your Tesla, and whatever the heck you want to put in there. But the salesman, he got sued. And my client won. And for another slice of tax advice, hire a real tax professional and follow, like, and subscribe.